There is a parental advisory warning on this video. For those of you that are sensitive to terrible financial results, you're going to want to turn off the video. For those of you that are sensitive to absolute abomination of one of the world's greatest semiconductor companies, you're going to want to turn off the video. And if charts that are trending back to lows that you haven't seen in over a decade on a stock, when the semiconductor industry is on absolute fire, you are going to want to click the down like button and click out of this video. Now, DJ, can you cut the music? Folks, you hear that soft and soothing, peaceful noise of silence. That silence that you hear is the comment section of my videos of all the motherfucking Intel fanboys who have been telling me that I've been wrong about this company for as long as I've been making videos. And I just want to show you guys a little something here. Is over the past 5 years, Intel Corporation, ticker symbol INTC, over the past 5 years, not including the 20% drop that we'll talk about in the after hours, shares of Intel are down 41%. Unfortunately for them, chips have been on absolute fire over the past 5 years. You had COVID introduce a lot of work from home. You've had AI over the last year, which has sent semiconductor companies absolutely soaring. Advanced Micro Devices, for example, is up 343% just over the past 5 years. NVIDIA is up 2,548%. You could put $1 in NVIDIA and actually be rich. And you have the SOX. Forget guys picking winners, individual stocks. Just the SOX ETF, which is your bread and butter, most popular ETF as it relates to semiconductors over the past 5 years, is up 220%. And I can't tell you how many people would get in the comment section of my videos and talk about Alder Lake and Forest Lake and Foundries and this, that, and the other, and how Pat Gelsinger shouldn't be fired and that he's doing a good job. I'm going to show you one last fucking time that this guy needs to get fired as of yesterday. Now, over the past 5 years, shares of Intel it's been a tragedy. Over the past year, it's been a tragedy. Over the past 10 years, it has been a tragedy. And folks, in the after hours, after the company announced their Q2 earnings, the tragedy continues. Revenue came in at $12.8 billion. There's a lot of problems with $12.8 billion in revenue. First of all, it's a decline year over year. It also missed estimates, which constantly get driven down for Intel. I tell you what, estimates for closer to 13 billion, or basically no growth. The high-end estimate, which that analyst must be high on some of that free ganja that they pass out here in California, $13.74 billion. They came nowhere close to that. Here's the problem, folks. Here's the problem. Here's a really, really big problem. And we see that it's not actually a problem. It's something that has been happening with Intel for like a decade now, is the company constantly misses and then guides lower on the outlook. Look at your Q3. Revenue expected to be $12.5 and $13.5 billion. So you might slow down sequentially quarter over quarter, folks. The problem is Wall Street was expecting a number close to $14.4 billion. The low end estimate was for $13.7. The high end was for $15 billion. And I'll remind you, Intel's great executive, Pat Gelsinger, who's turning things around, 12.5 to 13.5 on the estimate for their revenue. It's absolute disaster. So what is the company going to do? They are reducing their operating expenses. They're reducing their capital expenditures. They're reducing their cost of sales. They're firing people. They're laying people off. Newsflash, you should have done this about 2 years ago. Also, you have competitors in the marketplace these days. You have ARM Holdings. You have Qualcomm. You have Apple, who've literally kicked you to the curb. Every major tech company on the server side is designing their own chips. Amazon, Google, Microsoft, they're all in the data center, not just NVIDIA, not just AMD. Everybody is knocking down your door, and your products just aren't selling. And here is the evidence of it. Constantly, people would tell me about the next generation of Alder Lake, the next generation of Forest Lake, the next generation of some lake that flows down a river. Guys, the only thing that has been flowing down a river is the stock price and the sales of this company. Over the past year, you went from $13 billion on the revenue side down to $12.8 billion. The problem with this company is their gross margin continues to shrink from 4.6 down to $4.547 billion. So as we've seen, gross margins at AMD expand, certainly, let alone NVIDIA, expand over the past year, Intel's margins continue to contract. That's because they basically have to give away the inferior product for people to actually want to buy it. They haven't cut costs fast enough. Your research and development went from $4 billion up to $4.2 on the sales side. Guys, how do your sales decline 1% year over year, but then financially you spent 1.37 last year and spent about the same in the most recent quarter? We saw Meta drive up their sales. I think it was like 20% on the quarter, and they spent less on marketing and sales. Amazon grew their sales by over 10% in the quarter, and they spent less on marketing, general administrative. This company has to spend more and more because they have an inferior product. Now, they have these restructuring charges if you want to strip these out, although these are going to continue to reoccur. In fact, I think they're going to accelerate in upcoming quarters. You did about $1 billion in the most recent quarter. Here's your operating income. For most companies this size and this maturity level, well, you actually make a profit. Unfortunately for Intel, you are losing money, and it's accelerating from $1 billion loss last year down to $2 billion. In the chip industry, guys, it's tough to play catch up, and that's where Intel has been over the past several quarters. That's why we've said avoid this stock, because eventually, look, this time next year, there's going to be plenty of supply of data center GPUs. Every company from NVIDIA, AMD, Broadcom, Google, Microsoft, all these companies are going to be running at full capacity on those things. So the margins are going to compress, and that's bad news. That's really bad news for companies like Intel, which aren't making money in today's environment. They're going to continue to come under stress when it comes to the balance sheet. Cash continues to leave the building. They plug the hole a little bit as it relates to short-term debt, which has ticked up over the past year. Long-term debt went from 47 to 48, so debt continues to increase. This company will get bailed out maybe a little bit based on interest rates continuing to drop probably into next year. Now, from a cash flow perspective, if you thought operating profits were terrible, well, look at your operating cash flow. Folks, this is for 6 months. This is not even for 3 months. We're talking about 6 months. They pulled down they put their cash balance sheet up here because they want you to look at that. Folks, you went from $11 billion in cash last year down to $7 billion, so that's going in the wrong direction. Look at your net income from a negative 1.3 down to 2. Why NVIDIA is printing record profits. AMD is printing, I don't know if record profits, but they're certainly profitable. Guys, this company is losing money. It's a disaster. Only $1 billion, I say only $1 billion in operating cash flow. And there's some disgusting things on here, guys. Look at stock-based compensation. Look at the share price of Intel over 10 years, over 5 years, over a year, just year to date. It is down, 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 any way you look at it. But oh, the executives that people will clock in. Literally, there's some of you that will clock in for free in the comment sections of my videos and defend these people. 1.6 on the stock-based compensation up to $2 billion. How do these people even have a job, let alone be getting more stock-based compensation year over year? It's offensive. If you don't get offended by this, you should not be investing in individual stocks. Buy the iShares stocks. Forget trying to read earnings reports and all those types of things. Because if you don't get offended by this, this is where your money as a shareholder is going. And here's the problem. This company is trying to reinvent a business model in semiconductors which went out of style like 15 years ago. You no longer design and fabricate the chips. You either design them, very similar to what NVIDIA is doing, AMD, Qualcomm, these types of companies, and then you call up your buddies at TSM and they fabricate them. For some motherfucking reason, Intel and their fanboys thinks this is a company that's going to make chips again, and they're going to make them great. No, they're not. Look at your addition of property, plant, and equipment over the last year, 11.6. So on $1 billion, and again, this is for 6 months, you only made $1 billion of positive operating cash flow. and some of that went to executives, which is just so offensive. I can't even begin to talk about it. Addition to property, plant, and equipment, $11 billion. Last year was 13. Now, again, they're going to reduce capital expenditures. They're going to shave that back. But how are you going to compete with TSM on the fabrication side when you're shaving back on your capital expenditures? That company is going full force. We did TSM's earnings video. They're making tons of money. So this is going to be I don't get the strategy with Intel. That's why you got to start firing executives. You got to remake this company because the current plan is not going to work. You are not going to be able to compete with TSM. You're not competing with AMD. You're not competing with NVIDIA. God knows that. You're certainly not even competing with Apple and their own silicon at this point. So what is Intel going to do other than bleed money for the next couple of years? Guy, this is terrible. This is terrible. We have partner contributions. That's not good. When you see that on your cash flow, that is plugging a hole. Now, if you thought that was bad, it gets even worse when we look at the I'm going to show you the foundry. There's going to be some of you guys out there, they're going to open this foundry and they're going to make money. I'm going to show you that that is not going to happen. You got your client computing group. This is your bread and butter desktop computers. Well, you got, a little bit of notebook. You got a little bit of growth. We did AMD's earnings. I think it was like earlier this week. Time flies when it's early season. But they showed a little bit of growth, and you see that 6.8 up to 7.4. So off of the $7.4 billion on the client group, you made $2.5 billion. That's a big improvement over last year where you only made about $2 billion. So they're squeezing out margin. There's still people for some reason that want an Intel-based processor in their laptop, even though Apple's are better. Qualcomm's are certainly going to be better. I mean, everybody's making a better processor. I don't know why anybody is using Intel these days. Here's your data center and AI. Guys, this is the hottest thing, right? This is the hottest thing. And it's not just a recent thing. We're more than a year into AI being hot. How do you have declining sales in data center and AI? Well, it's because NVIDIA obviously has a superior product, and obviously AMD, Broadcom, others, custom silicon is eating into this. This is not going to be a big market for Intel. Just $3 billion. And look at this. They're having to give these things away. Data center and AI is the hottest thing. There's not enough capacity out there, and Intel basically has to give it away for free. The reason why you know that is off of $3 billion in sales, which is a little bit of a decline over the previous year, which is really bad. That's a really bad sign. 470 operating profits. This is operating income. 470 last year and $470 million. Look, to you and I, we're on the boat and we're partying. We're PJing across the country. This is a $130 billion company, guys. Even though the shares are down big, this is a $130 billion company. $470 million is not going to cut it this year, down to $276. Again, this is data center and AI. And now they have network and edge, which is kind of a steady business for them, but it basically makes no money. $140 million. Not going to move the needle. There's going to be some of you still in the comments that are going to point to the foundry business, even though, again, companies either design or manufacture chips. You don't do both. That model is gone. And the fact that this company is trying to do that is one of the world's stupidest things. The foundry business ticked up from 4.2 up to 4.3. Unfortunately, folks, here's your segment operating income, and here's your Intel foundry. Last year, you lost $1.8 billion on $4.2 billion in revenue. Well, you increased your revenue. Some of you are going to say, hey, well, look at the foundry business. It is increasing. Well, look what is also increasing. $2.8 billion in losses. And that's not going to turn around anytime soon. There's one company in the world that has mastered the foundry business, and I don't think Intel is going to be the second. Now, folks, this is really bad. When those results are that bad, so is the stock chart. Stock hasn't gone anywhere in several years. We've had a green box. You can go back and look. We've had a green box on this one for a while. There's been a time to buy Intel, and maybe we're approaching this because there's probably, this is like a scrap salvage. There's stuff with Intel, licensing, things like that. Maybe this turns into the next BlackBerry, Nokia. Some companies kind of come to mind that license some of their IP. I think Intel probably could fall into that category. I don't think this company is ever going to manufacture chips. I think that foundry business is going to go by the wayside. We didn't even talk about this company has gotten billions of dollars from the United States government to put up these types of numbers and then go lay people off. So us, the American taxpayer, is giving Intel money to expand their business, and then they go fire people. Guys, how does Pat Gelsinger even have a job right now? It is a joke. It is a joke. and so is the stock chart. It continues to move lower. You have support for shares down here at 20. In the after hours, we're at 23. I don't know why you would want to buy this one. If you buy this stock, maybe you're playing it for a short-term technical bounce. Maybe you're selling it, but over the past year, 5 years, 10 years, even the max chart going back to 1994 when I was like in 6th grade, you're up 746%, but I just showed you NVIDIA has done that really in the past 5 years. And look, it's just been a terrible investment. You got to get out of this one, and you learn some stuff from Intel. There's going to be other companies that we go forward that are going to turn into Intel. I mentioned a few of them. BlackBerry, there's some in the retail space that I think are headed towards this. Intel, not getting the job done. If for some reason you invested in Intel and you've made the argument to invest in Intel, I honestly think you should stop watching this channel. You should stop investing in individual stocks, and you need to go to ETFs. And the sad truth is, folks, that's the majority of people that buy stocks like Intel, buy kind of these beaten down kind of value traps. You're not an investor. You're not an investor. This channel is for investors. And I tell you what, just get into the ETF. The individual stock game is not for you. Folks, that was Intel's. I mean, it doesn't matter what quarter it is because they're all the same, but those were Q2 earnings. We'll be back tomorrow with the Fang Stock recap show. Until then, good luck with your investments, unless it's Intel.